Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 71, published on November 19th, titled Great Stock and Fund Picks Post COP26, and presented by Investing for the Soul. Investing for the Soul is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar and you can gain access to company and fund ESG sustainability ratings. Please note, I received no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. Several of today's articles relate in some way to COP26. Here's the first, titled, Following COP26? Look at these 3 sustainable investing strategies and 40 stock picks. It's by Jack Denton, writing in Barron's. Now please excuse my improper pronunciations of company names in these quotes from this article. So let's begin quoting. Interested in renewable sector? Morgan Stanley says, look at China Jushi, Jiangsu Zhongxian Technologies, Luoyang Glass, NG, Ørsted, Siemens Energy, FirstEnergy, and Sunrun. For energy storage, Ganfeng Lithium, Panasonic, Zhejiang Huawei Cobalt, and QuantumScape. Across hydrogen, Morgan Stanley identifies Beijing Sino High-Tech, China Petroleum and Chemical, Johnson Matthey, NEL, that's NEL, I Products, Enbridge, and New Fortress Energy. Attractive bets in sustainable alternative fuels, including major oil companies ExxonMobil, Chevron, and as well as Holy Frontier and Marathon Petroleum. The developing field of carbon capture, utilization and storage offers picks including Bayer, ConocoPhillips, and Occidental Petroleum. Opportunities in electric transportation and green mobility still abound. Familiar electric vehicle stocks such as Tesla, NIO, and Li Auto make Morgan Stanley's list, as do TPI Composites, Schneider National, Knight Swift Transportation, FREYR, Fisker, and Alstom. Renovation and energy efficiency also offer options. NARI Technology, SINOPEC Engineering Group, Covestro, and Rexel are among the potential plays. Morgan Stanley's view is that there are also many stocks facing headwinds from the trend of decarbonization, including sectors such as energy, power and utilities, cement, chemicals, coal, metals and mining, industrials, automobiles, airlines, and shipping. In particular, it is bearish on stocks including Consolidated Edison, Continental Resources, Xcel Energy, Ford Motor, BMW, Nissan, American Airlines, Deutsche Lufthansa, Air France, KLM, among others." End quotes. Now turning to infrastructure, another favorite of ethical and sustainable investors, there's this article titled "Infrastructure Stocks on Watch After Bill Passes Congress. 4 Under-the-Hood Ways to Play It" by Keris Lahif. It appeared on CNBC.com. Here are some quotes. "I think that the PAVE Infrastructure ETF is a great way to gain exposure." Ari Wald, head of technical analysis at Oppenheimer, says it has more room to run. Ward told CNBC's Trading Nation on Monday. "We're bullish on that industry because it is indeed reclaiming its leadership. It has also outperformed the S&P 500 this year, climbing more than 35%. Ward highlights diversified motion and control parts manufacturer Parker-Hannifin as one stock at the top of his watch list. Shares have jumped this month, rising by 11%. The broad-based S&P 500, by comparison, is up just 1%. Nancy Tengler, Chief Investment Officer at Laffer Tengler Investments, prefers to play the group through individual stocks rather than the PAVE ETF. She picked out 3 names she believes have upside potential. Xylem is a beneficiary of the $55 billion water spend that's been allocated in the bill, she said in the same interview. This is significant spending for water. The state appropriation bills are somewhere in the $2 billion to $2.5 billion range annually. This is $55 billion over 5 years. Then, for the highways portion of the bill, we like Jacobs Engineering. So think about the $40 billion that's being spent for bridges. That's going to benefit engineering and construction companies. And then Martin Marietta, which is obviously just the asphalt for the road, said Tengler. Xylem, Jacobs, and Martin Marietta materials are all up by at least 30% this year, while the S&P 500 has climbed 25%. End quotes. Now for my second article on infrastructure. It's titled 3 Stocks That Could Win Big Under Biden's Infrastructure Bill by Matthew DiLallo, Neha Shamaria, and Ruben Greg Brewer. Here are quotes from the authors on their picks. 1. Ruben Greg Brewer chooses Cleveland Cliffs. Over the past couple of years, Cleveland Cliffs has turned itself from a steel industry supplier into an integrated steelmaker that also sells key competitors' iron ore pellets and other steelmaking inputs. Cleveland Cliffs could also be benefiting from increased demand for its steelmaking ingredients. It is, thus, highly leveraged to the elevated steel demand likely to come from increased infrastructure spending. Cleveland Cliffs stock is the best performing North American steel mill over the past year. However, thanks to the mergers used to create it, the steelmaker also has the most leverage, with a debt-to-equity ratio of 1.3 times, twice as high as the next competitor. 2. Matt DiLallo likes Xcel Energy. The infrastructure package includes significant funding for the energy transition to cleaner alternatives. That aligns perfectly with Xcel's energy investment plan. The utility has committed to achieving net zero carbon emissions by 2050 and is investing billions of dollars to achieve that bold goal. In addition to investing heavily in renewable energy, Xcel Energy is spending billions of dollars on upgrading its transmission system. It's also building EV infrastructure, including installing charging stations in major transportation corridors and underserved communities. The company said it could invest up to $4 billion over the coming decade on hydrogen-related projects to blend that emissions-free fuel into its natural gas system. The company could tap into government-funded programs from the infrastructure bill to support its spending plans. That could enable it to achieve its decarbonization efforts while creating significant value for shareholders by growing its earnings and dividend. 3. Neha Shamaria recommends United Rentals. As the federal spending on infrastructure picks up, so should demand for heavy machinery like the ones United Rentals rents out. In fact, the company is already witnessing high demand even before federal spending kicks off. Growth of 22% in its third quarter rental revenue encouraged United Rentals to upgrade its outlook. United Rentals looks well positioned to win as infrastructure spending in the U.S. gathers steam." End quotes. Now this is a new style ESG ETF. Article's title is Vote, ESG Activism in an ETF. It's by Nina Mishra of Zacks. Quote, "In this episode of ETF Spotlight, I speak with Yasmin Daya Bilger, head of ETFs at Engine Number 1, about activist investing through an ETF. The activist investment firm had sent shockwaves through corporate America in May when it targeted ExxonMobil and successfully placed 3 candidates on the board of directors. The Engine Number 1 Transform 500 ETF Vote, which started trading in June, intends to encourage transformational changes in companies through shareholder activism. The fund invests in 500 of the largest U.S. public companies and comes with an expense ratio of just 0.05%. Vote is an excellent alternative to standard S&P 500 ETFs for ESG-focused investors, since they can get a similar financial performance while participating in efforts to bring transformational changes in portfolio companies. Microsoft, Apple, and Alphabet are the top holdings in the market cap-weighted ETF, which has already gathered about $250 million in assets." End quotes. Honorable mentions. These are ethical and sustainable investment recommendations worth reading about, but I hadn't the space to review them in this podcast. 1. Title: 3 Solid Climate Tech Funds for Investors, appearing on Morningstar.com by Sylvester Flood. Quote, "Bill Gates has said that the next generation of FANGs will be climate tech companies." End quote. 2. Title: New BlackRock Minimum Volatility Factor and Fixed Income ESG ETFs provide more choices to putting sustainability at the core of investment portfolios. On Business Wire, press release. Quote, "These funds further enable our clients to build strong portfolios customized to their sustainable goals and navigate the transition to a low-carbon economy." End quote. Now, UK-focused picks. 1. Title: ACE 40 Ethical Rated List. Interactive Investor completes annual review. Quote, "In performance terms, 48% of active funds on ACE 40 are in the first and second quartile versus peers over 1 year to end September 21, with 79% in first and second quartile over 3 years and 91% over 5 years." End quote. 2. Title: The Best ISA Investment Funds in November 2021 on moneyfacts.co.uk by Darren Clark. Now, recommendations associated with renewable energy. 1. Article title: Why Solar Energy Stocks Are Suddenly Hot Again on The Motley Fool by Travis Hoyam. Quote, "Headwinds have turned into tailwinds for the solar industry." End quote. Article 2, title: Green Energy Stocks, Why Now is the Time to Invest, from the blueandgreentomorrow.com site by Sean Mellon. Quote, "We've chosen to focus on stocks listed on the coveted and tech-led NASDAQ 100, according to the index's most recent performance and data." End quote. 3 in this grouping, titled, is Why Solar Energy Stocks Jumped Thursday Again on the Motley Fool by Travis Hoyam. Quote, "The U.S. government rejected a request for solar tariffs, and investors liked what they heard." End quote. Number 4 in this list, titled 5 Climate ETFs for a Post-COP26 World on etfstream.com by Jamie Gordon. Quote, "Investors can rest easy knowing a glut of ESG ETF launches in recent years means that they are bound to find products matching their climate convictions." End quote. 5. Title: 3 Climate Tech Stocks to Watch in the Wake of COP26 by Josh Dillon on NASDAQ.com. Quote, "Top climate tech stocks to watch right now: Dayco New Energy Corporation, Brookfield Renewable Partners, and Plug Power Inc." End quote. Incidentally, Dayco is a controversial pick as it is accused of using forced labor. Well, these are my top news stories with their stock and fund tips for this podcast. Great stock and fund picks post COP26. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Please stay well and healthy, and also conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on December 3rd. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.